Hi folks, CB3 here with another live update. How do you read a statement from your broker? Well, all I can really address with you is reading one from Interactive Brokers because that is the clearing firm that we use for all our clients. But people come to me and say, there's just so many pages. How does this make sense? Well, in this episode, I'm going to tell you exactly what's important and what you don't need to look at on your statement so that you can understand not only how we're trading for you, but how we're doing. Now, there are many in this industry that want to downplay the importance of looking at a statement, but the truth is you are paying us for performance. That said, no investment performance is perfect month after month, year after year. We all in this industry have ups and down times. But for you to know how we're doing and how that affects you, you need to be able to understand how to read a statement. So I'm just going to look at the statement here, and those of you that are listening, you're just going to have to follow me. I don't have any images on the screen for those of you viewing, but I'm going to just sort of summarize the various sections. So the very first thing that you look at is the table of contents, and then usually it's the open position summary. So this is a summary of all of your open positions. An open position is a stock or an ETF or some other instrument that is open but not yet closed. So this shows you what you have as of the date of this statement. It doesn't mean that when you actually get your statement, it's still going to be in your portfolio, but it means that as of this statement, it's an open position. It'll list everything there. The next thing is that you'll see an asset allocation by asset class. How much do you have in stocks? How much do you have in bonds or bond equivalents, currencies, commodities, real estate investment trusts, etc. if you want to know what the asset classes you're invested in, okay? And then performance by region. Are your stocks doing better in the US or overseas? Now, most of you know that we invest all around the globe in some of our programs, not all of them, but some of them. And then there's a benchmark performance comparison page, and that's pretty important. We are relative performers as your portfolio manager, meaning we track a index, sort of the S&P 500 would be what most of us track in this industry. Some of them track the NASDAQ or the value line, but we'll track a variety of indexes, but the overall index is the S&P 500. The thought on this is that if we can't beat the S&P 500 most of the time, then you could just take your money and put it in an S&P index fund and go play golf or do whatever you want to do. The problem with that mindset is that if there is no risk management in place, then if the S&P 500 drops 50 to 55% like it did in 2000 and 2009 and 34% I think in 2020 in the 9-week COVID crash and then recovery, you're taking substantial risk. And the older you are, the longer it takes you to make this money back. So understanding how you're performing versus a benchmark, and again, it's usually the S&P 500, is very important. Next, you'll find risk attributes of the portfolio versus the S&P 500. So obviously, we have stocks in the S&P 500, but we also have stocks in the NASDAQ. We have stocks that are in the Russell, and we're comparing all of those various risk attributes to what's in the S&P 500. Some of this may get into the weeds a little bit. You may not be that interested, but it's there on your Interactive Broker statement. What a lot of people are interested in seeing is the performance by symbol. So which stocks have done really well and which ones have not. Those of you that follow my CB3 Live program where we talk about our methodology understand that we have a very strict 1% risk tolerance of portfolio equity loss on any position that we open. Now, a stock could lose 8%, but it's not going to be more than 1% of the portfolio's value. And that's how we do our very best, nothing is perfect in this industry, to mitigate risk to the downside while leaving the upside open. We don't set profit targets. We want to see a stock be bought and hold on to for years and years. That's our goal. The next section would be projected income. So for those of you in an income dividend situation where you want to know what your income is going to be, that's a convenient page to not only see the summary of the amount you're going to make on your dividends, but also the payment periodicity of those payments, usually quarterly, but depending on the stocks that are in there, that could be staggered over multiple months, which is what you want. You don't want to have 4 big globs of income 4 times a year. And then lastly, interest and fees. Are you paying higher commission costs? As you know, we do not participate in commissions at CB3 Financial. We only make a management fee from you, but Interactive Brokers does make a small fee, and you'll see those there, as well as the summary of our fees paid out on a day-by-day basis, as well as any interest earned on your portfolio. And that's pretty much it. But that's how you read a statement. I hope that was helpful. Obviously, if you have more questions, give me a call or shoot me an email, cb3@cb3.com. We want you to be an educated investor to understand not only what we're doing for you, but how to interpret that on the statements that you receive either in the mail or that you can download literally every day on Interactive Brokers website. Thanks for listening. I've been CB3 for a live update. We will see you the next episode.